Welcome to BS Crypto Army. Today we're going to be talking about support and resistance. And I was getting a lot of feedback around that I should be making videos on technical analysis. So here it is. I'm starting a series on technical analysis. We're going to go step by step on one of the important things on trading elements so that we can learn and become better at trading together. Welcome to Crypto by Sahir. In this channel, I recommend some of the underrated cryptocurrencies for life changing gains. So if you love making money and cryptocurrencies, make sure to hit the like and subscribe button. Also, make sure to hit the bell icon so you're currently updated with my videos. Before starting today's video, I just wanted to remind that the giveaway is still live. You just have to be an active subscriber of this YouTube channel, and you also have to comment, be engaging in the community, and follow my social channels and share the videos. Okay, with that out of the equation, let's get started. So what are support and resistance? They're nothing but key levels on the chart. Support is a level where you'll expect the price to come down and bounce off from. So it's more of like a bottom line from you'll expect the selling pressure to decrease and then bounce off. Resistance is another level where you'll expect the price to bounce off from towards the bottom. So you'll expect some selling pressure at that level. So that's pretty much it on the definition of support and resistance. They're just levels, key levels that you look into. Now, support and resistance could be drawn into multiple time frames. So for short term, you can think about 15 minutes, 1 hour, and over the long term or weekly basis, you could think about for swing trades, 4-hour chart, right? For long term, you can think of 12-hour, 1 day, week, month. 4 hours also sometimes used for some sort of a short-term, long-term middle grounds. So for now, we're going to focus on the daily chart, since it's going to offer you more stronger supports and resistances. So I'm going to give you 3 examples to start. So first of all, I have the Bitcoin chart, and it doesn't have to be crypto. It could be any commodity that has price movement. So let's start with Bitcoin. On a daily chart, I have selected from the trend line tools, favorited the horizontal line so that it comes here. I could use it very easily again and again. So first of all, I'm going to zoom out a bit, and I'm going to look at the levels from where I see rejections and where I see like baseline supports, multiple candles to support that. So for now, I see that this level was hit by a lot of candles. We could also adjust this to have this included. So that's that. And then I can see there's a level here. This level, and then this level here, supported multiple times. Then previously we saw this level somewhat supported multiple times. And then we could go back here and then do it again. But just focusing on the current action, we could see there are multiple levels that we see price action moving up and down. Now, these are in general levels. And when we look into context, we look at them as support and resistance. And what is a strong support and a strong resistance? And likewise, weak support and weak resistance. So if you see multiple candles overlapping on that line, then that level is strong level, strong support, strong resistance. And if there are only a few lines overlapping, then it's somewhat of a weak support. So this one was somewhat of a weak support since it had just this touch, and these. It is still strong, but it got rejected here. It just bounced off 2 times. One from here, it bounced off here, and one here. So somewhat of a weak support. From here, we saw multiple touches. 1, 2, 3, 4, 5. And also, this was somewhat of a support before and acted as a resistance already and then became a support. So this is another strong level to look at. So that's one example. Let's head over to Ethereum's daily chart and do it again. Let's zoom out a bit, select horizontal line, and look at the levels that touched multiple times. Okay, it's my bad. That's a horizontal line that I want to make. And here, this is the first level. Then we see this is another level that's currently acting as a support. Then there's another one here, and here, right? And you can adjust it a bit to align with multiple candles. I would not call this a level. This was just on a daily chart, just a breakout, and everything got back up. Since usually in breakouts you see huge candles coming in, and when you see huge big candles, big body candles, then you can also expect a sell-off with the same price action that got up to that level. If you see small candles, then you're seeing somewhat of an accumulation phase, and then that's probably going to be a sign of breakout if it is supported by a moving average. We'll look through the example a bit later. So let's head over to another example. Final example. I have the BNB chart. Zoom out a bit first of all, and then select horizontal line. Right. Just make sure you favorite it so that comes up here. Let's place it here, and let's find out key levels. So this was one level. Again, this was a short-term level, this level, and currently, if you want to call it the support, but let's just focus on the long-term trend. So this was a level, and let's say this. All right, and then there's another level you can call it. This was multiple touches here, but yeah, nothing on the forward, just some touches here. So not a particularly key element, but if it comes down here, then probably this could be one of the levels for support later on. All right, you don't have to be perfect. Just make sure you align the bottoms with multiple time frames, multiple candles, so that it becomes a strong level. And if there are less candles, then it's a weak level, whether it's support, whether it's resistance. All right, so this acted as a resistance here, support once it reached, when it breached it, and then support again, break it down, support broken, another support, held on to it, broke the support, and then got back up, acted as a support, and moved up. So these are some levels, and with context, you call them support and resistance. So now you can trade support and resistance. It's one of the strategies people are using since decades, but you should be very careful on trading, let's say, on breakouts. There could be fake breakouts, and you should always follow some indicators alongside. So for example, you can search for moving average, and I'm going to adjust that to, for example, 20. All right, so right now it's gonna give you some information along with your level so that you can have more confidence in your decision, right? So let's look at here. What happened here in BNB's chart before was that this MA20, moving average 20, was acting as a support, and it did continue becoming a support. So two things: when you see this a consolidation, like not very big candles to the upside, but big candles becoming small, or small candles not moving the price much, then it's good. If it stays under the channel, if it's not on the resistance, if it's not on the support, then it's a good sign that it could break out, and it did break out. Since there were two things: moving average 20 acted as a support. You could look into other moving averages if you want, but right now, just for the sake of an example, it did act as a support, and then there were multiple candles in the middle of the channel. They were not in resistance, they were not in support, they were in the middle of the channel, and then there was some sort of sell-off, but then it regained the MA20 and then had big breakout right here, right? And then we saw the sell-off again, acted as a support. So MA20 was very efficient support for BNB, right? You can call trend lines as support, just like this horizontal line. You can call EMAs as support, as long as it acts like it. Right now, this MA20 is acting more like a resistance in the previous setup. Currently, somewhat of a support. More candles will confirm if it's either a support or we're coming back down, right? And then similar strategy, you can apply this to the moving average of Ethereum. Change that to 20, and then you'll see similar idea, right? So it acted as a support since a long time, and then it break out and then acted as resistance for some time. Again, breakout, support, some sell-off, and then these candles were somewhat of an indication that there's probably going to be a breakout, and then we see this breakout. So make sure you use some indicators along with this these channels or support and resistance to help you decide if there's going to be a breakout, there's some accumulation happening with for example, moving average acting as support, then probably it's a sign of breakout. And also just make sure that when you see huge candles here, then you can expect some sell-off as well. It's not going to go directly to the moon. That never happens, right? And when you to see this much sell-off, then you can expect the price to either bounce back or act as more of a consolidation phase. So usually with big candles, you see prices going up fast and down fast, and likewise, right? So let's just complete our example with moving average and changing that to 20. And we'll see similar trends. So this MA20 acting as a support, huge breakout, right? And then some sell-off, and then somewhere MA20 becoming a resistance, some consolidation, and then again MA20 acting as a support, a huge breakout. And then since big candles, we saw some sell-off, and then same goes forward, right? Right now it's acting as a resistance. So MA20, MA50, these are some of the levels, some of the moving average points that you can look into and guide you in your trading like decisions, right? So basic 101, support, resistance, they're just levels, key levels. Make sure to zoom out, cover most of the candles. The more candles it touches, the better, the stronger the level is. Stronger support, strong resistance, and then you can guide yourself through your journey whether you should take the breakout or not with moving averages, for example, right? If it's not supported by a moving average, then you should, right? So that's pretty much it for this video. I hope you enjoyed it. Let me know in the comments if you felt that this was informative, and let me know if there's any other topic that you want me to cover. And I'm also doing some research on what should be the next to present to you guys. And with that, I'll take a leave. So make sure you hit the like, subscribe. The giveaway is still on, and I'll see you in the next one.